Should be live on YouTube. Just setting this up real quick. Okay. Good afternoon, everyone. My name is Patrick Hawe. I'm here for Derek for a couple weeks as Derek takes a well-deserved vacation. So he is running around Europe right now. I think he's in Spain. We wish him a good vacation. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is a SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure in its entirety. I very much appreciate it. And position disclosure, nothing new for the YouTube people, unfortunately. I was swinging Soxel from 2 Thursdays ago, and I stopped myself out of it today. I definitely could have kept it, but I wanted to be a little bit tighter on newer swings, just in case things go crazy on CPI tomorrow. So unfortunately, I don't have anything new there. I did have Soxel up until today, and then I closed that swing out today. So let's take a look at the market and basically what happened, what we can expect going forward, which seems like a bit of a coin flip at this point. So coming into this morning, S&P was gapping up, futures were gapping up, pretty calm morning. If you look at this pre-market action, gapped up, holding pretty well, a little bit of volatility kind of pre-market, and then we opened and really just took off. I think I titled this video something along the lines of AAPL Bulls keep bears in check. What I meant by that was, although today, yes, was a day 4 up, yes, we were gapping up into it, yes, we're a little bit extended on a daily chart, we're not so extended and it's not such a big run that it's okay, time to pound the table and, short with no out and be ready to build into a bigger short on higher levels. Like, we weren't quite there yet. We're definitely not neutral. Like, we're not like perfectly in the middle. We're definitely a little bit extended to the upside, arguably a little bit overcooked to the upside. But it wasn't anything really to be too concerned about coming into this morning. And we have CPI tomorrow morning. So while things were looking fair, pretty bullish, like, I feel like today, not that we were calling for this because this was like a good day today, but basically we were saying we're not in a spot where we have to come down, but the upside certainly is getting to be a bit limited just on a day 4 with a gap up. As we, work our way to try to negate this gigantic red candle from that Powell day, which was, I guess, 2 Fridays ago at this point. So we're working to negate this candle. Are we going to negate it tomorrow on CPI? Maybe, maybe not sure. I think one of the biggest reasons why this SPY candle looks like it does, and it's not more of just like a doji candle, like something like this where you don't come down, but you do have an intraday down move. You have like a tail up top. Was this Apple move. Apple, absolute monster today. Beast. Total beast. Which really changed the tone of it as well. This Apple has been relatively weak for the past like 2 weeks or so, ever since the Powell day. Which I don't think it really had anything to do with Powell. People were trying to say that Apple event that happened, which I forget exactly which day was that Apple event. Might have been this day. But like people didn't like how they didn't raise their phone prices enough, and this was relatively weak pretty much all the last 2 weeks. And we were talking about it coming into this morning, where we were looking at the Apple 160 level and saying, maybe we actually get a short, which hopefully no one did take a short versus 160, and if you did, hopefully you use 160 as a stop and didn't fight it. But this Apple was relatively weak for the past 2 weeks, whereas you look at like a Tesla, which has been relatively strong, you can just see this daily chart. Tesla was opening here this morning, whereas Apple was opening down here, like just purely just going off of like the look of the daily chart. So Apple was relatively weak coming into today, And things seem to change today. There were some reports out this morning, some headlines out this morning that, to keep it simple, from what I read, basically, despite the phone being expensive, despite the changes not being anything great, it's still the same old Apple where, people want the new phone, people want the new devices, the lines to get the new devices, the wait lists to get the new devices are full, blah, blah, blah. That's not the exact headline, and, if anyone has, like, those reports, but basically reports coming out saying this new phone's still going to be pretty hot this morning. So that was a big contributor to the market's strength today, was this Apple candle. Just absolute beast. So through 160 right away in the first 5 minutes. So right away, and I remember talking about this on the first 5 minute bar when we broke 160. Apple's a fairly clean stock, and I hope that never changes, because it's hard to find clean stocks these days. But if 160 is going to be a level, Apple either shouldn't break it, or it should maybe tail above it and back below it, and that's it. But right away in the first 5 minutes of the day, Apple trades through 160, closes above 160 with a great bar on great volume, holds 160, holds 160, and when this is holding 160 for this long, you probably shouldn't be thinking, okay, I want to short this back down through 160, because it probably shouldn't be breaking and holding up above 160 for that long in the first place. So that right away was a pretty early look, a pretty early sign of just how strong Apple was and how strong it may be today. So really, Apple definitely kept the bears in check today, whereas I think if Apple didn't do what it did today, SPY probably would have had more of like a I'm not saying SPY should have come down today, but it probably would have been more of like a doji looking candle with, maybe a bit of an upper wick to it or something like that. But Apple certainly kept the bears in check today. The market itself, not too playable. There was some intraday plays that we did. So we were strong this morning off Apple. And then things got, in the first 10-15 minutes, it's okay, we're strong. And then we start to really melt up here. And looking back, this doesn't really look like that big of a deal. But I remember this morning, just the way we were going up was okay, we're just melting up. Are we going to turn back down at any point? You don't want to step in front of a bull train. You don't want to, fight the flows. The flow is pretty bullish this morning. They weren't really coming in and hitting puts in a big way or anything like that. I think some of us had an okay intraday short when we broke back down through this consolidation. So we pivoted up, tried to pivot up, and then failed this pivot back here. So some of us took a short back down through here. That paid a little bit. That might have stopped you out over here. Then some of us, I think, re-shorted back down through 410. That paid a little bit, but then eventually you got stopped out. And that was up until, noon, 12:30 or so. And then after that, really not a whole lot, which is, for the most part, more or less what we were expecting, given that tomorrow is a big data number, big CPI number. So for the rest of the week this week, we have CPI Tuesday morning at 8:30, PPI Wednesday morning at 8:30, and retail sales Thursday morning at 8:30. So tomorrow, Wednesday, and Thursday, all fairly important economic data points coming out. So this market should get moving a bit this week. It shouldn't, today I think we were more expecting of a kind of boring day, but I'm definitely not expecting a boring week. And that should start tomorrow. I see Jerry, I see your VIX comment, which I'll definitely get to in a second. But so S&P closed fairly well, Apple closed fairly well. Things look pretty good here, but again, CPI tomorrow morning. So, we'll see how they gap us. It shouldn't be that big of a gap either way, whether they gap us up or down. I don't really care. I don't know how they gap us, and I don't really care either. It shouldn't be that big of a gap. Obviously, what's going to matter is what the number is at 8:30, how we react to that number after 8:30, and then how we react when the market actually opens. There's going to be, there could be two different reactions. The reaction at 8:30 could be different than the reaction we get when the market actually opens. When the market actually opens, they could do the exact opposite move. They could continue with the move that's happening at 8:30. It's very interesting. I think it was last week, the Wall Street Journal article came out with, the famous Fed whisperer of the Wall Street Journal or whatever, basically saying that we are getting 75 hike for the September meeting, which I believe is September 21st. And it's interesting because it seems like a lot of the Fed speak that was going on last week, they're saying, wait for data, wait for data, wait for data. So it's interesting if we're going to get 75 no matter what happens with the data tomorrow and Wednesday morning and Thursday morning, but especially tomorrow morning. Because you would think if the CPI is going to be cooler, which they're saying it's going to be cooler, but they're saying 8.1. I mean, that's not low inflation by any means. It's not really that cool of a number. I'm honestly kind of surprised that they're not expecting it to be a bit cooler. And we were just chatting in the room today how some things seem to have gotten better, some things are just as bad, if not getting worse. So like your grocery store basket seems to be just as bad, if not getting worse. But then on the other hand, gas prices have come down. I think there was a headline actually today that gas prices have been coming down like literally every day for 90 days straight. And I even noticed like gas by me, I'm up in like the Boston area, I think it was like 380 I saw over the weekend. And I definitely haven't seen it under a 4 handle in a while. So some things seem to be getting a bit better. Some things seem to not be getting better, and if not getting worse. Literally everyone from you and me to Mr. Powell himself is trying to figure this out because it's crazy times that we're in for sure. 516 California. I mean, that's pretty bad, yeah, but Cali almost went to 10 at one point, right? Like LA area. I don't know if it ever actually hit 10 in the LA area, but it looked like it was pretty close or getting there. So that's the market in general. Let's take a look at, I guess like Jerry bringing up the VIX, which is a good point. So that was like there were some cross currents today because while the market gapped up and held its gap well and wasn't really too bearish intraday, one warning sign that appeared in the morning, but this negated, actually now looking at this VIX down move into the close, this looks like we probably gap up a bit. It was interesting to see the VVIX. This is the gap from over the weekend to this morning. It was interesting to see this VVIX gap up with the market, which was a potential early warning sign, but it just didn't really come to fruition. And maybe it would have if Apple, didn't have those reports this morning and Apple wasn't as beastie as it pretty much like could possibly be. That VVIX gapped up, but closed relatively weak. Let's take a look at the daily chart there. Nothing really to take away or be, too wary of there. It wasn't like I remember this gap back in, I guess this was like the beginning of the August. Like this was a notable gap that was an early warning signal. I think it was like a week early or so before the market really rolled over there. Not quite the same here. A gap up, but a weak close there. Let's take a look at the actual VIX itself. Like Jerry, I think just rightfully pointed out, VIX green today. So VIX green today with a green market. Yes, that is another warning signal. But I mean, we have event risk tomorrow, as well as Wednesday morning and Thursday morning. But definitely starting tomorrow, we have event risk. So it's not too surprising to see just a little bit of a VIX green day. I mean, it's a good day to throw some hedges on. If you're super duper long and you got like a big long book and we are closing well on a nice day 4 gap up, you probably should have some hedges on. You should either have some hedges on or what I did was just lighten up in general. Either lighten up or have some hedges on, because it's very possible to put hedges on and lose money on those hedges. When, if the market just like really chops and kind of stays flat, you could end up losing money on those hedges. And usually when I speak of hedges, I think of puts, right? So like if the market's flat after the event risk gets taken away, those premiums really get sucked out from that event risk. So market looks pretty. So overall, I guess just to like recap all that, market looks great. But it is a day 4 up. So going into the event tomorrow, it's certainly, I would certainly think that the upside is a bit more limited than the downside. However, we aren't exactly expecting a super hot report. We're expecting this report to show some cooling, for it to be a bit better. At least like a step in the right direction, even if it's just a baby step, at least a step in the right direction. So what does that, does that just mean we trade down to like 405 or so? Do we come down all the way to 400? If we trade up tomorrow morning, if we trade up tomorrow morning on CPI and SPY's at anywhere from 415 to 420, I would not be surprised if, say, the number comes out at 8:30 in the morning, we trade up over 415 pre-market, and then that either gets faded by the time or after the market opens. That doesn't mean that we trade up over 415 and they fade us back down to 400. That probably doesn't happen. But SPY over 415 tomorrow morning with our daily ADMA, even if our daily ADMA is up to 405 tomorrow, over 415, over 10 points of extension on the daily chart, you'd expect there to be some sort of ceiling for sure. And even if there's not, like we were saying earlier today, it's just the law of extension, which it basically, for better or worse, pretty much is a law. It's not like we're never gonna see this 8-day again. I guess we could blast right through 420 and blast up to 425 and then go sideways at 425 and have these moving averages catch up, yada yada. There's very many ways to go about correcting extension in the market from your equilibrium. But it's an interesting setup. Things look and feel pretty bullish. There's a bit of a VIX warning coming in today, but it's not really, like, it's a small warning, but I don't think it's anything to be too concerned about. So yeah, it's an interesting setup. Good day for the market, good day for Apple, obviously, but we have a fundamental event that can certainly change things, aka technicals really don't matter as much for fundamental events, right? It's similar but different for a name going into its earnings report, and you can't really look at your technicals going into an earnings report as much as you want to try. It just, I don't think in the big picture, in the long run, it's just not great correlation for what the technicals look like going into a fundamental event like this. So we'll see how CPI looks tomorrow. So that's the market. That's what happened today, and that's what we're kind of looking for and expecting tomorrow. Which I don't know if I even really gave a clear answer on that, but I don't think anyone has a real clear answer. 410, a bit of a level, but 420 is the bigger level. Even like 410 today intraday, we kind of blasted right through 410. It wasn't really too. It was a bit important intraday. So bounces off 410, short down through 410, but then back up through 410, chopped around it a lot. Not super important. 420, 415, definitely a level. 420, obviously a level. And 412, we said 412 today too. We did have this level. We talked about 412 from these lows back here, right? Which I guess that did, in hindsight, end up being the high. Really didn't pay too well shorting that 412. But 412 a bit of a level, 415, and then 420. How we're going to react to the report, I have no idea. How the report's going to look, I have no idea. So I'm not going to make some stuff up just to sound smart, because like honestly I don't really know, and I don't think anyone else knows either. So that's why today was a good day to, as many of us were buying things down by 390 a week or two ago, today was a great day to either lighten up or put some hedges on. And I don't think it's impossible for us to trade up on the report, so I would rather lighten up and miss a move than, put hedges on or put shorts on and, lose money on a move, right? I'd always rather miss a trade than lose money on a trade. So that's the market in general. Not a super exciting day. Some stuff to do. I guess I'll just take a look at the other, what we had on our list this morning. So we had a few names this morning. Didn't really love anything, but a couple okay setups. Carvana got a pretty solid upgrade this morning. This worked okay, but was probably a bit of a headache. I didn't end up trading this one. But Carvana, we said the 40 level, which was from these pivots over here. This high is 39, and this high is like 39 quarter. This high is 39.50. This 40, just like kind of a whole number with it as well. 40, a bit of a level for Carvana. So if you were ready for that, again, I wasn't trading this in the beginning of the day, so I don't know how easy or not easy this was. It looks like if you took 40 right away, you probably got stopped, but you probably shouldn't be buying 40 with a 40 out when you're gapping up, and again, your moving averages on the short term aren't quite caught up. But after this tails back up, this starts to catch up a bit. Could have taken this 40 around here. That probably paid a bit, and then you got stopped out. That was probably a bit frustrating. Then this wedged out in front of 40. Could have taken it back up through 40 for a very grindy afternoon session there. So Carvana 40, okay, but definitely not easy, and probably a bit of a headache to actually trade that actively today. APA, Apache, energy was not fantastic, right? This oil ended up rolling over a little. Actually, I guess this closed fairly flat. I feel like every time I typed up oil, I was like, oh, oil looks good, oil looks bad, oil looks good, oil looks bad. And it really just closed flat. So nothing really great from energy there today. Just want to look at XLE real quick too, if I can type it up. Yeah, similar but different to XLE. Pulled in, nice open, and then just like nothing from the day. So this Apache got upgraded this morning. We were looking at either 40 to go long over 40 or versus 39 or 38 is what we wrote. This 39, just, simply just hold dollar levels where, you can see this 38, but it was gapping up so much it probably shouldn't trade back down to 38. So this 39, a bit of a level as well, and then 40, more of your daily level. And this is probably similar but different, but similar to that Carvana, where like if you waited for 40 here, you should have gotten paid a bit and then probably got stopped out. If you were really active and really watching it, I think this pivot was probably buyable here. So if you took this, you might still be in that. Or if you did my V-bottom trade and took it, you cheated on 40 and you took it through the high, probably the same thing. Got paid, maybe got stopped out, probably not a good enough close for you to really keep that or swing that. So Apache, okay, not a fantastic trade, but could have made some money there. Nat Gas, AR, and Tel. This AR was tricky today as well. Similar to Apache, did the V-bottom, trades down, then trades right back up through the high. That paid a little bit, and then I think a couple of you guys might have gotten stopped either on this tail here, or if not, most likely on this little shakeout back below this consolidation over here. And then this ended up closing well. So that's 3 names, 3 trades that were decent in hindsight, but like we're not media people, we're actual traders, so like I'm not gonna pull up this daily of AR and say what a fantastic trade. You could have bought AR at the day low and kept all of it, right? Like, in reality, it's not always that easy. So similar to the other two that were just brought up, okay trade, but probably a bit of a headache to actually trade it there. This tell 450, this never even triggered, so no harm, no foul. This daily was setting up decently, and then now kind of breaking down a little. I mean, nothing too bad there. As long as it's over 4, I think you're fine there, or at least this daily candle here. But tell never triggered, so no harm, no foul. And then the only other couple, it's Newmont got initiated as a buy from Goldman. I don't think I ever really looked at this after the open, though. Really just, like, nothing there. Just gap up, opened, and, like, literally nothing at all. Gold miners, not great. But, again, like a day 4 up, a lot of these names were having these day 4 ups where could you get some intraday momentum? Yeah, but do you want to start a new swing? Probably not. So nothing great there from Newmont or the gold miners. And then the 2 short plays that we talked about really didn't even work out. Which, the first one I brought up was Tesla back down through 300, just because it was a bit extended on the daily chart over that level. And, if they're going to smack the Qs back down, this probably gets smacked back down through 300, but that never triggered, no harm, no foul. I'm certainly, in hindsight, could you have bought it versus 300? Yeah. But do you really want to buy a day 1, 2, 3, 4, arguably a day 5 up? Do you really want to buy a 300 when your ADMA is at 290? Probably not. It's probably not going to pay 10 out of 10 times in the long run. But that 300 short never triggered. And then Apple 160, which, again, this, failed right away pretty quickly, just right up through 160. So no harm, no foul there. And I think that's really it for today. Trying to think if I'm forgetting anything else. Oracle reported earnings this afternoon. Looks pretty flat after hours, though. Yeah, a bit shaky, down, up, and then pretty much flat overall. So I think that's it for today. Again, we weren't really expecting too much today. I know SPY looks like it closed great, and it looks like it was a great day, but I don't think it was a great day. I don't think anyone should have any big P&Ls either way, up or down. If you have a big up P&L, congrats. But I'm curious how you did that. And if you have a big down P&L, then, just assess what you did wrong. Like, it's fine to make mistakes. It's fine. I do it all the time. Everyone does them all the time. You just got to learn from them so you don't make the same mistakes again. That's what's going to prevent you from really, growing in this business, is making the same mistakes over and over again. But yeah, we weren't really expecting too much for today. On a day 4, gap up, but we're not really overcooked enough to be slamming the short button. So yeah, not too much today. I don't think we were really expecting too much though. And we got CPI tomorrow morning, just like any other big kind of event, right? Like the day before a Fed, the day of the Fed meeting, you usually don't get too much action. So that's really what we saw at the second half of the day today. And yeah, I think that's all I really got to talk about. So happy to answer any questions. Let me close my window. Sorry, this drill is really annoying. Let me close my window real quick. I closed my windows, but honestly, it didn't even really help that much. Sorry about that. So yeah, happy to go over any questions, comments, concerns, complaints that you guys have for today. Any questions about any trades that we went over or anything. But yeah, that's really it. So let me scroll back up in the VTF. So yeah, Jerry mentioning the green VIX, we talked about that. Definitely something to note for sure. Gas still $6 in the Bay Area. Shout out to you guys living in California. I love that state, but it's so expensive. I love California, but it's kind of brutal out there. Inflation was a problem August 2021, so year over year comparisons will still be high. Yep, for sure, for sure. Oh, it was not. Yeah, 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 for sure. Yes, definitely. Um, it should be a step in the right direction, though. It should be at least a baby step in the right direction. Powell's gonna be pulling his hair out tomorrow if this is like a hot CPI report. Like, I don't know. It could definitely be a bad day if it's hot. I don't think it's gonna be too hot though. It shouldn't be. It's gonna be hot, but like some big upside surprise. Um, Powell's probably gonna freak out a little bit. So we'll see. We'll see. CEPQ doing secondary, but buying back 125 of it. I assume this is a thinner name. CEQP. Crestwood. Oh yeah, down a little bit after hours. Definitely a very thin name there. Thin name. Peloton chairman, co-founders leaving. Interesting. Interesting. The company's kind of a disaster still. They burn so much cash. Could you talk about how you enter a morning trade when there's just 1 or 2 5-minute bars? What are you looking for? Sure, Andrew. Trying to think of an example. I mean, I guess Apple 160 could be used as an example. You always have to, and Andrew, I think you're a little bit newer. So, I'll just re-emphasize this for yourself because it's very, very important. You always, pretty much always, 90% of the time, need to be taking trades based on your bigger picture, either your daily or your weekly chart. That doesn't mean that you can't take some intraday momentum on like news or like just a big level or anything. But honestly, even second half, what I just said, like taking a momentum trade on a big level, that big level is not a 5-minute level. It's going to be a daily or a weekly level. That's why it's a big level. That's why it's an important level. Levels are based on highs, lows, opens, and closes. So honestly, those can be some of the best trades when you don't have like too much information in your 5-minute chart. It's kind of like what you're saying, a morning trade where there's just 1 or 2 5-minute bars. But if it's at a daily level, like a real daily level, that's all you need. You don't need like multiple bars. So just like I don't know exactly what you're looking at on your screens. If you're only looking at a 5-minute chart or something, I try to emphasize that you should have some ability to easily look at all your time frames. That's why like this one screen, I have a 5, what is this, a 30? I have a 5, a 15, a 30, and a daily. On another screen, I usually have something more like a 2, a 5, a 15, and a daily. But you want to be able, and you don't have to like set things up exactly like this, but you want to be able to easily see all of your time frames. And I like having them all up because I always like knew that you had to do that. But I find that in the heat of the moment, like when the market's actually open and you're actually making a decision, you just get so focused on what's on your screen, which is fine. But that's why I like to have all those multiple time frames up. But what I mean is you're probably not thinking like, all right, let me click on the 15 and let me click on the 30 and let me click on the daily and let me, switch these all around and click, click, click. Like, it's just like not time efficient to do that. So you always want to be aware of your bigger picture, of your daily charts, know what you're looking at. And that's how you get your big daily levels, like this Apple 160. So that's all you really need is the level and the volume. So like, say you wanted to like Apple 160 is a big level. Say you're thinking, okay, like maybe I should short verse 160. You see this blow through 160 on big volume this morning. if you're a perfect trader, you probably should be thinking flip to the long side. That's something like Felipe is pretty good at doing. I'm trying to get better at doing that myself as well. I'm trying to get better. Um, but so if you're only looking at a 5 minute chart, like say this morning we wanted to go long Apple through 160, which my mistake. That was like not what I said this morning. But let's just like pretend for a second that I'm the best and I said buy Apple through 160 this morning. You don't need any bars on this 5 minute chart to confirm anything really. You have your daily level, which your daily level is going to be a lot more important than whatever 5 minute levels you come up with. You have a daily level, you have the big volume to confirm it. That's all. That's all you really need. So, for example, a gap, like say this is a gap and go through 160. 160 is your big level. If it doesn't trade through 160, no harm, no foul. It trades through 160. You buy through that level, and you're usually giving it to the low of the bar that it trades through the level. If the low of the bar, I'm probably going to talk about some things these next 2 weeks that like I do myself that Derek probably wouldn't teach in his beginner classes, but it's because he wants you guys to really learn how to trade things properly and not, um, you know, like don't like chop yourself up or get shaken out of things and this and that. But then I'll come in and talk about how yes, you need to trade things right, but you need to manage your money right too. You need to manage your risk reward right. So sometimes like these big bars, it's too much risk. Like if Apple's opening 158.50, or let's say even 159, and then trades through 160, a dollar risk in Apple isn't too much, but it's not like small either. So sometimes you can come in and kind of be a little cheap and just say, okay, like 50 cents is a good increment for Apple. Like I'll give it 50 cents or so. You don't, and I say that because I don't want people to like hear me say that and think, okay, like 50 cents is the magic number. I'm going to give everything 50 cents. No, because it depends what you're trading. 50 cents on Apple is not the same as, well, Amazon's like not cheap anymore, but I don't know, like a booking.com or like, I'm trying to think of like expensive names. A lot of these go to expensive names split, so they're not too expensive anymore. But like like 50 cents on Apple is not the same as 50 cents on like Fubo or something, right? Like it depends on what you're trading. It depends on the average true range of that name. So that's why, and I did that meeting that other week where I talked about like extension plays and how, sometimes you want to add every 25 cents, might be every 50 cents, might be every dollar. It depends on what type of move, what type of range that name usually puts in play. So like a SPY or an Apple, you don't want to be trading SPY and Apple and risking 10 cents to try to make 10 cents because these things move points in a day. It's just like too small. You're going to get yourself chopped up. But like 50 cents in Apple is fairly reasonable. If Apple's breaking out of a real daily level on volume, it probably should go through the level and not even look back, let alone go through the level and then trade all the way back down. So sometimes you can be a little bit cheap on those kind of like opening drive plays and give yourself a bit tighter room because one, that allows you to take more size, and two, just by the nature of that trade in itself, if it's gonna be a perfect Momo breakout whatever trade, it should go through and not look back, just like Apple did 160 this morning. It shouldn't go through and then come back to lows and then touch the level and then come back to lows and then break out later on. Like it should do what Apple did this morning. So I know I just kind of went on a little bit of a rant there for your question, Andrew, but I guess like to sum it up, just your daily levels, and your volume. That's all you need. And your daily levels, you're obviously going to get from either your daily chart or your weekly chart. But that's it. You don't need it like the way you asked the question made it seem to me like you're playing a lot of 5 minute charts and that's what you're basing a lot of your trades off of. And you want to execute off 5 minute charts, but you want to be doing that execution with the bigger picture, with your daily charts in mind. So yeah, I hope that makes sense, Andrew. If it doesn't, definitely feel free to ask some follow-up questions, but I hope that makes sense. But yeah, just having your same thing with like Carvana 40, Apache 40. Those 40s, those are daily levels from the daily chart. Those are daily levels, so like that's why we know those are the levels. Like I don't really care if if whatever Apache goes through 3971 or 3974 or something like that, because the real level is 40. This is a bit different because it V bottom today high, so that's like a different type of trade. But the point is your daily levels, which again are usually either whole dollars or half dollars or something like that. So yeah, I hope that makes sense, Andrew. Hey Pat, quick question about EMA, SMA. Which do you prefer or is better to use? There is no right or wrong answer on which is the best. That we use the 8 EMA and the 21 EMA for short term. So I guess first I'll say EMAs. I use the 8 and the 21 EMA. That's what a lot of like the T3 group uses. Why 8 and 21? I don't know. I mean, they are fib numbers. So I guess there's like some magic there. But who's to say that an 8 EMA is better than a 9 EMA or an 8.572 EMA? Like, they're just averages. There is no like perfect right or wrong answer. If there was a perfect right or wrong answer, some big bang algo would have figured it out already and it would have been ruined already, right? So like there is no perfect answer to that. You just gotta use what you like and what is right for you. So for the most part, I would say, keep things simpler. Don't have too many moving averages up. And try not to, you can change them around a bit, but try not to change them around so much. Just watch and see how things develop. I mean, the 8 and the 21 are pretty good for gap fill. Like, they're just pretty good. And usually, honestly, you could even take away my 21. I don't even need it. Because the 21, for the most part, on the 5 is going to be pretty similar to the 8 on the 15. So yeah, I mean, there's no real like perfect right or wrong answer for you there. But what I use is the 8 and the 21 EMA and then the 50 and the 200 SMA. At least that's what I have on my charts that I'm showing you guys. I use some more on other charts. I use other indicators on other charts as well. These charts are about as simple as can be for me, but you could take away everything besides my 8 EMA. You could take, I don't need the 200, I don't need the 50, I don't need the 21. If I just had candlesticks, an 8 EMA, and volume, and I could change time frames, like I swear that's all, like I'd be fine with that. Because it's just understanding just, again, like that concept of equilibrium and extension and knowing that if you scroll, like literally the ADMA, like if you scroll back through the history of time forever and ever and ever, excuse me, we always correct to the ADMA some way or another. So I don't know if that helps or not. It might not help, but the point is there's no like super right or wrong answer. There's nothing really perfect there. You just got to use whatever you like. I've seen a lot of people use 8 and 21. I've seen people use 9 and 30, 33, I think is another fib number. I've seen people use like 9 and 33, or like 34 it might be. I've seen people use like the 34 moving average. So yeah, there's no real right or wrong answer. Use whatever you like. If you see something, like if you see patterns, if you see like this ADMA, for example, it tends to be pretty good on the 5 minute for gaps and assessing gaps. If you see patterns like that, then stick with it. But if you're using something random and you're taking trades off it and it's not working out, then switch it up. And if it is working out, then stick with it. But yeah, there's no perfect right or wrong answer there. At what point would you say you would have realized Apple was a long instead of short after the gap? Literally in the first 10 minutes. I think we were talking about it real time too. Apple took out 160, and again, you got to know what you're trading and how it trades. Apple's a pretty clean name. It usually doesn't like stop you out and shake you around and go through levels and then back down. Like SPY will go through a level and then back down, whereas Apple will come close or touch it to the penny but not really go through. And I remember saying that this morning when Apple broke over 160. Okay, like it probably shouldn't even be breaking 160 if a short off 160 is gonna work. But it broke 160, and then you spend another 5 minutes holding 160. That's just, I mean, that was it really. And I think we said that in real time too. It just shouldn't. It's just not what should happen if you think 160 is a short and it's going to fail off 160. It shouldn't go through 160 on volume, hold 160, and then spend another 5 to 10 minutes holding and trading above 160 before making its leg up. So literally in the first like 10 minutes of the day or so, I think it was pretty recognizable, the Apple strength. And I remember talking about it in real time as well. Who has that, Zach? So yeah, just the key level, and that's just like key. That's why important daily levels and knowing what your daily level is so important. That allows you to flip, right? Just keep it simple. Long above the level, short below the level. Apple short below 160. Apple got above 160. Apple held 160. It's long above 160. Like it really can be that simple. As complicated as trading can be, it really can be that simple. Derek not liking that I'm gonna take all of his teachings and ruin them for everyone. But I'm the captain now, Derek, so sorry, buddy. Oxy 66 was good. I remember this 66 level. I remember talking about it a lot last week. Yeah, I wouldn't. Yeah. What does this look like intraday? This looks hard for Oxy. I don't know. That looks hard. And that's like a pretty messy daily setup. I guess it's above 66. It tailed off 66. It's holding 66. So you got that going for you. Let's see. So above 66 is good. Next for Oxy, to me, it looks like 68 is next for Oxy to really get above it. You can see 68 back here, came back down. I think like 70 was a level, came back down. 68 holds, 68 holds, 68 holds. Finally 68 breaks here, comes back up. 68 is now resistance. 68 was somewhat resistance today. 68 is your next level for better confirmation for Oxy. I like, it's good that it's above 66. It's good it's holding 66. But this is a doji into moving averages that are sloped down. So I wouldn't say this Oxy looks great either. But 68, if you can really get back above 68, that's going to be something to watch. Maybe Oxy gives us like an inside day tomorrow, and then we can trade it up through 68. Or maybe 68 triggers tomorrow. But at 68 looks like better confirmation. That looked a little bit tricky today. It does. I am doing that, but I think I'm relying on the 5 minute too much. I need to put more emphasis on the daily trades. Yep. Yeah, for sure. Trading based on daily charts and daily information it's just you're probably gonna take less trades, but they should be better quality trades. I always like to say like half the battle, and honestly the harder half of the battle to making money in trading is not losing money, right? Like, what's better, taking one trade in a month and making $100 off of it, or taking 10 trades and five of those trades you make $100, five of those trades you lose $100? You probably had a more exciting month because you traded more, but at the end of the month, one guy's up $100 and one guy's flat, right? So like that's like honestly, in my opinion, the harder battle to trading is not making money, but it's avoiding losing money. And yeah, you pay. Yeah, true that. But even just like even without that, commissions are like you shouldn't even worry about commissions. You need to make like 3-4 pennies for you shouldn't even really worry about that. But yeah, so yeah, taking trades off your daily chart with your daily charts in mind. Again, you're probably gonna trade less, but the trades you take should be better quality trades, should pay you better. The risk reward should make a lot more sense. And yeah. I hope that makes sense. 34. I think 34 is a fib number as well. I forget what exactly the definition of a fib number is. It's something where like it's its own square root or something. I forget the exact definition. It's the end of the day. I'm too tired for magical math. Any tips for keeping focus on a day like today? I wanted to take a nap during the afternoon. I don't know. You should have taken a nap. I mean, I don't know. Take a nap. There's nothing really. I mean, you might miss like a news event or something, but I don't know. There was nothing. There was nothing due out this afternoon. There was nothing that was supposed to come out. It was supposed to be a more boring afternoon. So, stay focused. I don't know. I guess I could tell you to work on your Excel spreadsheets or work on your game planning or, yada yada. Or like do fundamental research into names that are cheap and pay good dividends or are growing their profits, or, do some like fundamental research or something like that. But there was nothing to do this afternoon, in my opinion. And I'm not just saying that because SPY did what it did. Just the action was pretty slow. Besides, like in Apple and Tesla, the action was pretty slow. Market wasn't really doing anything. Market wasn't really supposed to do anything. Market participants are waiting for CPI to come out tomorrow morning. So, I don't know. I mean, go take a nap or go for a run or, exercise or go to your local soup kitchen or something. I don't know. But just don't like force trades because you're bored. That's for sure. Whoever asked that, Bandit. So yeah, I mean, I don't know. I don't know if that like helps you focus, but like you shouldn't necessarily be like super hyper focused on SPY this afternoon or the market this afternoon when there's just nothing really going on. So, yeah. Pat, could you name one or two other clean names to keep in mind? That's a good question. Honestly, I don't know if I can. AMD is decent, but it can be very whiplashy too. Like this AMD can trade somewhat cleanly, but this can like rip up a dollar and down a dollar and up a dollar and down a dollar, especially in the first 10-15 minutes or so. It can be very whiplashy. And even this one, like this is one where I would look for levels to flush and then buy it back up through. Like honestly, I can't really, and maybe someone else can chime in here, but I can't really think of too many other names besides Apple that really do respect levels almost perfectly for the most part. And that's fine. Like it doesn't mean you only have to trade Apple. It just just be aware of what most names do, which is, I mean, we're aware of high frequency robots, and we're aware of, stops getting shaken out. It happens all day, every day, which is why we trade based on our daily levels and our important daily levels that should hold. And usually that's like I almost never see, besides like a name like Apple, I feel like I almost never look at a name coming into a level and say, okay, I'm going to buy versus that level. Like I almost always I'd rather the level flush and then buy it back up through the level. So yeah, I don't know. I mean, maybe someone else, Microsoft. Yeah, Microsoft's kind of like a grindy name though. It's not a great intraday trader. I mean, it can be, but Microsoft's more of a grindy name in my opinion, both on the upside and on the downside. Like on days when Microsoft trades down, that thing can just sell and sell, and it doesn't really bounce the same way like an Apple or an AMD will. Microsoft's kind of more of a grindy name, honestly. A clean name like Clorox. You guys are funny. So yeah, I don't know. Apple's special for sure. Apple is special, but we know that. Thanks, Derek. What is it, like midnight or something over there? 1 a.m? What are you, like in the middle of the club in the VTF on your phone? 11 p.m. I guess that's not too bad. It's the sum of the prior two numbers. Fibonacci equals. Oh, okay. Yeah, I knew it was like something weird. Because I know there's only. Yeah, that makes sense. I'm not going to even do that math in my head right now, though. Do 100 push-ups every time you get the urge to trade. Yeah, something like that, for sure. Do 100 push-ups, take a $10 bill out of your wallet and put it in a piggy bank. I don't know, something. But don't force a trade because you're bored. Don't do it. Don't do it. It might work one time. Is it going to work month over month after month after month? Probably not. Maybe it will. Maybe you're the best board trader ever, but probably not. Let me check YouTube for any questions. No questions on YouTube today. Alright, looks like I got through everything. Anyone else have any last second questions? Otherwise, we'll wrap this up, and everyone should get a good night's sleep for CPI tomorrow morning. Should be an interesting morning. I really don't know how it's going to play out. Again, I said this earlier, all I know is that it's a day 4 up. It's a gap up into a day 4 up with a close strong. We are extended to the upside. We are a bit overcooked to the upside, but it's nothing too extreme yet. So don't think we have to go down on the report tomorrow morning. We could go up over 415 before we come back down tomorrow morning. I really don't know how we're going to react. I really don't know. So personally, I lightened up, and if we go down, I'm ready. If we go up, I'm ready. If we go sideways, I'm ready. Hopefully you guys are ready too. So thanks everybody. Have a good night, and we'll see you tomorrow morning for CPI.